The relentless expansion of state power often sneaks in under the guise of mundane regulation, and the latest example comes from the Netherlands. This nation seems to be vying for the title of the most intrusive nanny state, as news emerges that Dutch citizens are now required to declare cash holdings exceeding a mere €661, or €1322 for couples, kept within the supposed privacy of their own homes. This isn't just another bureaucratic hurdle, it's a fundamental assault on private property, financial privacy, and individual liberty, executed through the chillingly absurd mechanism of taxing fictitious returns. Let's be blunt. The demand to inventory the cash in your own home and report it to the state is an act of profound arrogance and aggression. While authorities may offer the weak assurance that physical inspections are unlikely, the compulsion to self-report remains. This policy transforms every citizen into a suspect, obligated to prove their compliance by revealing private financial details. The state implicitly claims ownership, or at least oversight, over every single euro, even those held outside the formal banking system. This isn't governance. It's surveillance masquerading as fiscal policy. The mechanism chosen for this expropriation adds insult to injury. Cash held above the arbitrary limit is deemed to generate a fictitious return, set at 1.44% for 2025. This is pure economic nonsense. Physical cash, especially in an inflationary environment engineered by central banks, loses value. It does not magically generate income while sitting under a mattress. But the absurdity deepens when citizens are subjected to a 36% tax rate on this imaginary gain. This isn't a tax on wealth or actual income, it's a penalty tax levied on non-existent earnings, a punishment for the crime of holding physical currency. It's a thinly veiled wealth tax built on a foundation of pure economic fantasy. This policy perfectly embodies the state as an entity that produces nothing but consumes the resources of productive individuals through coercion. Creating, monitoring, and enforcing this cash declaration rule requires a bureaucratic machinery, inspectors, administrators, rulemakers, all funded by the very taxpayers they are hounding. It diverts resources from genuine wealth creation into the sterile task of tracking and taxing. This system generates no value, it only extracts, monitors, and controls. Governments and their central banking allies despise physical cash because it provides anonymity, facilitates direct exchange, and offers an escape route from total financial surveillance. By penalizing cash holdings with declarations and fictitious taxes, the Dutch state aggressively discourages its use. The goal is clear: push everyone into the digital banking system, where every transaction is logged, every balance is known, and assets are vulnerable to freezes, confiscations, negative interest rates, and capital controls at the whim of the authorities. This isn't about preventing crime, it's about maximizing state control over the individual's economic life. This measure is a prime example of lawfare, using legal structures not to protect rights but to undermine them. Who will diligently declare their €700 cash savings? The honest citizen, the person trying to follow the rules. Who will ignore this requirement entirely? The drug dealer, the black marketeer, the sophisticated tax evader who already operates outside the system. This law imposes burdens and anxieties on the compliant while having zero impact on actual criminals who continue to use cash with impunity. It's a classic case of the state punishing virtue and inadvertently strengthening the relative position of those who disregard its dictates. The inherent contradiction is stark. Official bodies like NIBUD advise keeping some cash for emergencies, acknowledging its practical necessity. Yet the tax authorities stand ready to penalize you for holding slightly more than a minimal amount. Furthermore, the €661 limit itself is utterly arbitrary. It has no basis in economic reality. It's a number plucked from thin air by bureaucrats, easily lowered in the future as the state seeks ever more revenue and control. Today, €661, tomorrow €300, the precedent is set and the slope is slippery. The Dutch requirement to declare modest cash holdings and pay tax on imaginary returns is not sound fiscal policy. It is tax tyranny. It violates fundamental rights to property and privacy, is based on economic absurdity, and punishes the law-abiding while leaving criminals untouched. It is another front in the global war on cash, aimed at corralling citizens into a fully monitored digital system. This is the modern interventionist state in action, viewing its citizens not as free individuals, but as resources to be tracked, managed, and exploited. It deserves nothing but condemnation from those who still value freedom. If you want to reduce your taxes to single digits, make your assets impossible for anyone to touch, and gain more freedom with second citizenships, Get in touch with Liberty Mundo and book a consultation call. We will help you develop a complete blueprint to organize your life to safeguard your wealth and your freedom. Follow the link in the description for more details. Thanks for watching, and see you in the next one.